NASDAQ, S&P 500, TLT, you know, we're seeing it across the board. Speaking of NASDAQ, we reached maximum pain there. We basically got down to 11,500, tapped that level and instantly bought off. And NASDAQ's not the interesting one. It's actually the SPY that's most interesting right now. So here's the session. Here's what happened. You can see that monster sell-off. And just to look at the 5-minute chart here, look at that turnaround. On the 1 minute and 5 minute, it basically made a series of higher lows, breached that area, and just rallied as hard as it could to get those options expirations on the SPY right to where they wanted them. And we'll see that soon. For the week ahead, I think this area becomes a huge point, this 12,000 kind of 50, 60 area. You've seen resistance here. This is where the sell-off all began. So I think bull market rally experts will be looking at this breaching. And once that breaches, pullback zones to then take further longs. That seems quite likely. For bears, they'll be just looking for a new low. Any new low past this point seems unlikely that it will come back easily from that, because that will mean that the max pain wasn't really successful and the market's true intentions are really to go lower. So of course there's a bull and a bear case always. I just think it might be overdue to have a little bit of a bull market, and a lot of it's got to do, well, when I say bull market, bull rally, it's got to do with being outside of certain things such as the Bollinger. So you'll notice the Bollinger here, and I don't always bring it up, it shows extreme levels. So that is it when extreme fear is in the market. Now we actually got an extreme fear level in the previous week. That's 1, 2, 3, 4, 5, 6 weeks down. Already statistically unlikely. We talked about it a lot. This time we get another low that was formed followed by a rally, but we're still well outside of the Bollinger. So it kind of looks similar to over here, yeah? And what happened after that? We ended up getting a little bit of a rally. So this is a point where people are very fearful. Understandably, it's super fearful out there. Of course, it's very tough to think about markets, you know, logically sometimes. But are we due to that mean reversion? Remember, the markets love a good bit of mean reversion. Coming back to that 20 moving average. Super far away from it on the weekly. It's certainly starting to look that way. Let's take the distances as well. Let's talk about those distances. If we move from here to here and we think about from here, not with the false break rally, so around that level there, all the way down, we hit it in the previous week and then we took it out in terms of those lows and then rallied it back through. Let's have a look at the rally. How did that look? Again, boom. Big wick here. Huge amounts of buying occurring to try to get it back to that 3,900, 390 on the SPY. And if we get a rally through, guess where level? This is why I use the SPY. This zone here, this 3950 area, just talking about in the private community that we've got in Discord. If you're interested in getting a free 7-day trial, you can of course do that. This area here becomes a big level for day traders for the week ahead. If rallies occur off this, you would think the buyers are going to come back in and show commitment. If we obviously bust off this just before 4,100 high, then where's the next level going to? Well, if you think about any of these types of theories, let's say we bring Elliott wave into it. You've got your 1, you've got your 2, you've got your 3, 4, 5. Now, some people would say, well, that's a new low. So, you know, has it started something new? But I'm going to go with that for this standpoint. Now, this is where we get that turnaround story. So if we get a turnaround story, will it be similar to this, where we get that ABC kind of turnaround story? Certainly could be there. And distances, because remember, we've already measured that distance on the way down being very, very similar. Well, that would mean that rallies should be relatively similar as well. So if we took a rally from here to here, we'll use that as the rally point. So 1 second, just grab that. There we go. And we think about where that would put us. Notice how it goes back to around that just on 4,300. Would that make sense? Where is our mean reversion going to be at the same time? Well, that's going to make a lot of sense, because by the time it gets up to this point, that's where mean reversion would be at. So I can see the bull case here, and I can see the bull case for the nastiness that occurred throughout the session as well. Because if we look at the options expiration, you'll notice for this week, we've got a lot of puts still sitting all around those 360s, 370s, 375s, and 390s, 380s. So max pain is technically at 405 right now, a little bit higher than the market, but I think it all comes back to this point here. I wrote here, 390 remains a huge level coming into this Friday stock market options expiration on Twitter. And the reason I did that is because when you bring this up on a chart, look what happened. We had a lot of 400s. There were a lot of 400s. They started closing those. So remember, this is open interest. So those open interest strikes were all closed off. and then they really hit all of these people trying to make money from puts. Everyone was down. And I bet you this ballooned through the day, where people were continuously loading puts throughout the session, etc., etc. We can see already how many options expired worthless, and they defended the zone. So when we talk about defended areas, you can see the manipulation into these key events. And unfortunately, it is what tends to occur. If you're interested, follow us over at FX Evolution on Twitter. Let's move into Bitcoin. Let's talk about Bitcoin levels. Still in consolidation. Nothing much to really report here. Mostly down to the stock market, we would think at this stage. If the NASDAQ can start to rally, expect Bitcoin to have a bit of a rip rally as well. It's found a level of support. That level is sitting around 28,700. I'll move this box down just so you can see that. If we zoom it out a little bit here. And the other thing is 32,000 remains the big key level. So basically we've got down here around this 28.6. We've got that resistance that looks like it's there, 31, but there's a lot of supply sitting around 32, and that's where that 20 moving average is. So I'd be pretty careful here on Bitcoin. It's consolidating for now, but that can also be a coil ready for a next move down. And we've got some pretty significant levels around that 23,500 and that level just underneath 20K. So you've got to be careful here in Bitcoin. Consolidating for now, maximum pain may have already been achieved over here. And this is the tendency that markets like to do with Bitcoin. If you think about the bottoms in Bitcoin, it likes to come up, likes to come down, consolidate, and then go on its next move. So 32 and everything else seems pretty normal. Ethereum, very, very similar. If you look at Ethereum on the chart, another consolidation, and this one has a big level at 24.5, basically 2,455. And then of course we've got a resistance, 2162. That breaches most significant level after that's 2450. Good luck out there in these markets. For the week ahead, in terms of what's going on economically, quite a lot of little bits of news coming out from different countries around the world. We've got Papa Powell on Tuesday coming out. Fed Chair Powell will speak. That's going to be a lot of fun, isn't it? I'm sure we're sick of him. And then FOMC meeting minutes, that's going to be a big one. Wednesday, 25th at 2 p.m. New York time. And then we keep scrolling through. We've got prelim GDP as well. And we've got core PCE price index coming on Friday. So it's a bit of an action-packed week. The Fed's coming back out to tell us what they think is going on. And that's never fun because the Fed seems to just say whatever the hell they feel like. They've changed it, as you saw by the meme at the start. You know, they could say anything, and can we really take it as truth? Not really. They're trying to keep the markets guessing. That's keeping the markets low. And on top of that, it's really feeding their hand, which is to try to combat inflation with as little rate hikes as possible. Thanks so much for watching. Please subscribe if you enjoy the content, and we'll see you in the next one. And remember, join the Discord community, links down below, and follow us on Twitter at FX Evolution. Bye for now.